Give us 30 minutes each week to discover the trends that are shaping the future of retirement with That Annuity Show. We bring you conversations with industry leaders who are revolutionizing financial products, technology, and distribution channels. Now, here's your host, Paul Tyler.
All right, it looks like everybody's got their lunch. Enjoy. Couple of new faces. So my name's Darren Wilson, Academic Director of the FinSec program here with UConn and faculty member. We're delighted that you guys can join us today, and welcome to our great panel discussions. Most of which I know, at least now I know. I don't know you. Hey, Dan.
Hey.
I'm John. Nice to meet you. Now I officially know everybody. But you're gonna have a great session here. I hope you enjoy and enjoy your lunch. Paul?
All right, thanks. I'm Paul Tyler. I work for Zinnia now. Did work here in the area up until just last year. A few of my colleagues, thank you for coming here. Topic today is I would say really focus on, so, I describe it as the so what panel. So we've heard a lot of interesting stuff about AI. How is it really going to change the industry that we're also proud to be in here in Hartford? How many of you had a chance to see read this quote manifesto that the CEO of Shopify put out a few days ago? I don't know. Laura did. Christy did over here. Real interesting. If you don't have if you do have a chance, look it up. It's been circulating a lot among CEOs. There are three sort of key message points that I think caught a lot of people's attention. One was the CEO said everybody in the company had better be using AI for productivity. AI is an expectation, not something that you may be using. Real interesting. Number two is find the people in your organization who are using it to be 100x more productive. I think the last session we had, was a great, gave some great ideas just in terms of how you can use these tools to really turbocharge where you're going. The last one was really interesting, which his message was, if you're trying to fill another position, you first have to justify why AI couldn't do the job. Interesting. And you look at our business, wow, we're pushing data, moving data, transforming data. You'd think our business would be ripe for that. So without any more preface here, why don't we just go along and do intros? Tell us who are you, and what are you most excited about on the AI front today?
Absolutely. So, hi everyone. Thanks for being here. My name is Imad Eid. I work for Global Atlantic. We're part of BKR. I've been with the firm for over 4.5 years now. I lead the Salesforce practice for them, so it's kind of been my focus as Salesforce.com. Heavily used by our sales organization, right, to use it as a CRM, log their calls, but also for some additional efficiency plays as well. AI journey for us started a few years ago, right around the time when ChatGPT became super popular, but at the time AI wasn't mature enough. So we've done a few use cases that are now in production with predictive AI, which we don't talk a lot about, but that's kind of was the starting point for us. And we've been, exploring a lot of different AI use cases with different partners and technology vendors in the insurtech space, but also outside of it as well. It's been a great journey. I'm very excited about it. I think there's a huge efficiency gain. I'm very focused on sales and helping our sales organization. And we have some very hefty goals to double our AUM without significantly increasing headcount. I think AI is going to be one of those players that's going to help us get there.
Yeah, thanks. Manu
Mazumdar. I'm the head of data analytics and technology over at Conning. Conning is an affiliate company. We are of Generali Investment Holdings. So we are a group of about 30 affiliate companies all put together, and we manage insurance company assets. My role in the company is not only to be the head of data analytics and technology, but I also am the chair of the AI governance committee and the AI utilization committee. I'll stop there.
What's most exciting for you?
Well, we are utilizing AI across the entirety of our value chain, right? We do a lot of research, proprietary research, both from an insurance industry perspective, but also thought leadership, but also from credit research and things like that. When you're making investments, that's what you're going to have to do. And we utilize a variety of tools and AI suite across the entire platform. And much like what Ahmad said, we're obviously garnering tons and tons of productivity gains. But later on in the conversation, there is going to be some discussion around culturally, where does that fit, right? It's one thing to be able to take AI tools and techniques and implement that into your organization. It's another thing for the company's culture to be welcoming of that. I'll leave it there.
Yeah. Okay. Thank you, Dan.
Awesome. Hello, my name is Dan. I'm our Chief Data Officer at Zinnia. Paul and I work together, full disclosure. So he's going to give me all the good softball questions, which is awesome.
He thought.
So I lead our data and AI and machine learning operations at Zinnia. And we've done a lot since Gen AI has kind of come through in terms of really pushing it through our contact center and using it to interpret our calls, to give us quality scores against our calls and things like that. Before Gen AI was a thing, we did a lot of machine learning. So in our policy unions business, we've got a lot of propensity models, a lot of expected value models that helped us continuously optimize in different parts of our value chain. I bring that up because we don't talk about the machine learning and deep learning stuff as much anymore because a lot of people are focused on Gen AI. But we are still doing cases like that are much more specific to what our business does on a regular basis. What I'm most excited about with AI, I'm going to use a more personal example. One of my favorite things about what Gen AI has done for a lot of us has been to help normalize like the knowledge spectrum. So example, I can be a full stack coder now, when maybe I would struggle with that a few years ago or would have to do a lot of research to really understand how software worked together to better build. Especially if it was outside my realm in the data space. And so I really enjoyed that. I know Paul has enjoyed that as well in terms of some of what he's built as well. But I think that's been an amazing breakthrough and a really good example of using AI for productivity, but also helping extend your skill sets beyond what you know.
Yeah, thanks. Doug.
I'm Doug. I'm from Prudential. I lead the retirement strategies, data science, and machine learning team. I previously led the insurance long-term care team. I'm also the responsible AI champion for the retirement strategies line of business. For me, I'll talk about some use cases in the individual annuity area. All areas of the business have several opportunities, like you mentioned on the finance and actuarial side. But I'll talk about kind of three domains. One in the pre-sales enablement process, the second domain is in the purchase experience process, and then finally in the product area. So it was mentioned before, there's no love anymore for traditional statistical learning, predictive modeling. But in the pre-sales process, how many folks here are familiar with the role of a wholesaler in an insurance company? Okay, good. So really quick, what's their job? Annuities are sold by bought. They work with advisors to help sell annuity products. That context is probably going to be helpful here. So traditional machine learning still plays a role. Two examples there are advisor shortlisting, or advisory lead models that was kind of mentioned in reference to propensity. So what's the benefit of those models? It helps tell the wholesalers, which advisors to prioritize and to engage with. Another traditional model you could think of is advisor segmentation. You can buy that out of the box from companies, rules-based. You can use unsupervised machine learning. In the pre-sales generative AI area, the benefit there is really all about helping scale for annuity sales. So annuity sales have been going up over the years, right? Driven by economic environment with our interest rates, driven by demographic factors like peak 65, right? 11,000 people turn 65 every day. So the four generative AI capabilities that I'll mention, they all are really about getting rid of administrative, clerical, and mundane tasks from wholesalers and helping them spend time more selling. Nobody wants to go back and key stuff in. So one use case there is kind of a general conversational assistant. What this can do is really automate administrative emails, which would typically take time, so there's time savings there. Other features are it can really quickly gather and update records. So if we're working with an advisor, if you want to update, they're going on a trip and this is their anniversary date, having that postal information is good, knowing they've switched firms and administrative assistant changed. Other use cases that were mentioned, like call summarization. So you're saving time by automatically summarizing a call, but some real-time intelligence can be there too, right? So if there's an instance on the phone call and there's active listening and they're talking about, an advisor talking about a specific client, that can automatically pull up the opportunities from that client, prior illustrations read for that client. If an advisor is talking about a certain product, that can pull up product specs, can pull up marketing information to help inform the conversation the wholesaler has with the advisor. Another one is, the third is like meeting preparation. So for meeting preparation, you can configure that for any persona in any industry. But for that, you can think about summarizing your prior meeting engagements, your prior interactions. You can be pulling things like the net promoter score for an advisor, their ease of doing business, their service interactions, right? Because that's typically another team. And then you can even pull in things from other data sources outside of your CRM, including things like web activity, etc. And so that really makes someone who preparing for a meeting could be like an hour, that accelerates that. So then again, they're just spending more time selling. Finally, the fourth one is it's called like post-meeting activity capture. So external wholesalers, they're in the field all day, right? And when do they even get a chance to take notes and follow up for next steps? This concept is really about just picking up your phone, 4 minutes, walking back to the car, speaking into the phone the notes, automatically transcribes it, and then it literally sets up those next best actions in your CRM. So it'll automatically send out, it can automatically send out an email, it can set up a task, it can schedule a future meeting, and all of these things are done, instantaneously, where they used to take a long time. So that's kind of the pre-sales area. Within the distribution friction experience, that's trying to move the contract to be sold, right? There, it's really about the theme of straight-through processing, right? Like, if we're going to have an increase in sales this year, are we going to hire more people, right? We can't do that, as was said before. So in this case, like, how do you leverage some generative AI tools to plug into your traditional automation to kind of accelerate the amount that's automated? So there, intelligent document processing in Gen AI is a great tool. OCR takes a long time to set up. It doesn't work for everything. Some of the new Gen AI tools can extract data faster, easier to set up, and you feed that data into downstream automation processes. Other use cases kind of exist in the thing you've heard of, like Copilot. So those types of tools, they can be used to gather information. They can be used for standard operating procedure guidance, telling you what to do.
Wow, Doug, that was a great walkthrough.
My work is done here.
Hats off. I mean, I think, for those of you who know Life the Wholesaler, right? I think, RJ, this was good. Great vision to paint now, and it sounds like it's more than a vision, Doug. And I'll start with the first question for you, which is, how do you make the ROI case? Now, Limmer, and I guess Sean left. Limmer's done a really good job. Kartik, if you don't know Kartik, you should. At Limmer, he's got a group of probably 40 companies, talking about AI governance, building an ROI model. That's one of the first things. It's been really tough. Like, it's interesting. You say cuts down administrative work from a sales person. Pretty tough to make a case. Probably a lot easier to say, look, this is how much more productive the agent, the wholesaler could be, or here's the avoidance. How are you thinking about making a business case and making the ROI for a lot of those real interesting use cases here?
Yeah, so the first thing, like a general, is that start with aligning to the business strategy and trying to drive those metrics that are their goals for the year. What you don't want to do is build AI on the side of the desk and then try to sell it. So you really, if you're aligned to the business strategy to start, you got tailwinds. The next thing is, like, with respect to model accuracy for Gen AI, the thing to look out for is, with regards to expectations, make sure they know it's not going to be 100% accurate, right? And the question is, what's the human error rate that you're replacing? If that human error rate is 5%, then, if the Gen AI error rate's 5%, the risk is fine. You're going to have a bit of ROI. But then in regards to, like, how do you calculate the benefits? I guess to the point mentioned, it's really what's the key driver? What are people going to be? Is it cost avoidance? Is it sales growth? But I tend to just rely on my traditional frameworks that were used for old machine learning, right? So in that context, you have a simple formula where you're going to have some inputs that are based on historical reporting, right? That could be application volume, it could be number of calls. You're going to have some inputs that are going to be driven by the value of the AI itself. And so for the value of the AI itself, that's the hard part, right? Like, how do you give a best guess? So the advice that I would say is start with your best guess, but then if you can't run an experiment on historical data, then run a proof of concept to replace that best guess. So say perhaps you're thinking of call avoidance, right?
So you can give your best guess, but then you can't do back scoring. So then you run an experiment. You find out, here's what we found out. It's an adequate sample. We avoided this number of calls. And if that's good enough, then move forward past proof of concept. If it's not, stop, fail fast type of thing. And if you do that, then I think you kind of cut your losses early and you're able to move forward.
Yeah, well, thanks. Dan, you've been blatantly focused like I would say like a microscope on call center. Maybe talk to us about like how do you think through the investment, the time, the feature. How do you build that and scale what you've been working on for the last few years?
Yeah, absolutely. I think when it comes down to it, like scoping is really important. We want to make sure that we're solving a problem that actually has bite to it. It's got a good like potential uplift there. There's a lot of human effort spent on it or time, or we think there's an opportunity to reduce that amount of time being spent. A good example of this was when we automated call quality scoring. So call quality scoring, when we thought about it, like it's something that our managers would do in the contact center on a regular basis. And the way they would do it is they would go take people off the phone, have them listen to their calls and score them. And they would do this every month for 1% of calls.
Oh, and sorry, you kind of give people a sense of the scale of the volume of calls you're talking about.
Good question. So we do about 1.5 million calls a year. Each call is about 5 to 7 minutes. We take calls on behalf of insurance carriers and other types of clients that we have. So that's kind of the nature of what we're doing, and it's a wide array of questions, right? It's different things. There's really no predictability in terms of what people are going to ask for. They could be looking for a data point, a statement. They could be looking for a check for their claim. They need to file a claim. Like there's all kinds of things they needed to do as part of the life insurance process, and that's what we take calls on. But going back to call quality scoring, right? So call quality scoring was something we had our eye on because, we only audited 1% of our calls, number one. And number two, like there's this big lag between when somebody would take a call, when they got feedback on it, because you can't physically listen to 1.5 million calls a year manually, right? But it was always done manually, and we'd only hit 1% of calls. So we rolled out, so we decided call quality scoring was actually a really good use case because the way we can get time back to the crew. But on top of that, we could also, outside of time savings, we could, give that real time or really quick feedback to associates as they make mistakes on calls or as they have opportunities to improve. And so for us, it was really like the ROI there was really raising the quality bar as opposed to really saving time. But same thing, scoping is number one. And then I like what Doug said about like, you want to get to a fast, like proof of concept to validate like if it's going to work or not when it comes down to it. A lot of things that you're building in this space can be very non-deterministic or difficult to get it to do what you want it to do. So the faster that you can get it to a place where you can prototype it and see how it's going to react to some of the things you're trying to do with it, you're going to end up moving faster by doing that. So I always push the team on like, don't get perfect. Let's get like an MVP scoped and let's get to that point of like, let's just make sure that we can validate the concept first.
Okay, so let me push just a little bit more on that front. And RJ, you can keep me honest in this. Maybe 10 years ago, now calls are expensive, a huge cost center for a lot of insurance carriers. RJ, I'm thinking like benchmark was maybe like $8 per inbound call. That depends what it is, and maybe $35 for outbound. Is that about like in the ballpark?
Yeah, it's much good.
Like how much, Dan? Like if we push that forward, like how much could what you're doing next change? The cost of a call center per carrier.
It could change it drastically, right? So things we've tested are things like voice automation to, do things like call avoidance and to still allow that kind of self-service and handle that, kind of non-deterministic nature of what people are going to ask for. But I mean, the model is kind of there, right? If you can avoid, so a couple of things, right? You think about it in two ways. One is avoiding, the human at all, so you save the cost. The other is working to improve the efficiency of the human taking the calls, right? So going back to some of the numbers that you were throwing out there, Paul, if you can get that call down from 7-8 minutes to 4 or 5 minutes, you're creating value there and using less capacity to do that. And immediately you start seeing that value equation start to add up with the carrier and the amount of human labor that goes into actually taking calls.
Mono, your turn. You've looked at the cost opportunities from two different at least two different ones, right? Survey. You've also looked at balance sheets. Why don't you talk about what you're seeing?
Yeah, it's actually interesting. I'll take you back in history for a second. I used to run part of Mass Mutual, and this was going back about 20 years or so. And the tech company, I won't name them, but it's like the Infosys, Cognizant, or whoever, that kind of tech company. They came down and made a presentation to me to say, we'd like to outsource your call center, right? And they had better statistics than we actually at Mass Mutual had at that time. And the math worked like this. They said, if you have a human being pick up that call, your cost per call is somewhere around $10 a call. If you had that same customer come in through your VRU system, your call cost came down to somewhere around $3, $4 a call, right? If you had that same customer come in through your internet and through your automated system, your cost came down to about $1 a call. Now, this is what this company said. I'll put humans down in, at that point, Malaysia and India combined. That I'll put humans on the call, and your cost is going to be 0.6 cents a call. 0.6 cents a call. This is going back 20 years, right? So now fast forward 20 years later, and that equation hasn't changed, but you know what has changed? What's changed is instead of them coming in and telling you that I'll put humans on the call in Malaysia, if you track this, Malaysia, Indonesia, they were big call center, kind of countries. They changed their whole ecosystem from being a farming country primarily to converting to really nice, high-paying jobs in their jurisdictions in these call centers. And those call centers are being decimated now through AI agents. Right? So it's not the humans who are going to do that anymore, it's the AI agents that are going to do that. And I like both Doug and Dan's perspective on this, where they said, fail fast. Fail fast is the motto in the entirety of the industry. And it's oftentimes not recognized that human beings fail as well, right? So the cost equation really comes down to what's the ratio of gain, the delta between a machine doing this versus a human doing it. AI agents, just this morning, by the way, Workday released something where they are now putting AI agents to do your HR type work, right? Human resource work. And if you look at that, I read that, and we use Workday back at Conning, and I made the comment, by the way, tongue-in-cheek, to the Workday counterpart, and I said, so you're taking the human out of human resources? And they said, well, yeah. And I said, what are you substituting it with? They said, with AI. I said, so let me understand this. So from HR, this goes to AIR, as in air? So you've got to be conscious about what you're doing and how you're implementing. Because I do think, even though agentic workforce is going to become a thing, you're going to have agentic workforce, distillation workforce, all of that stuff, AI agents, AI distillation models, all of that is great. It is here, right? I've got news for you. It's here. So you can't avoid it. But at the same time, you can't avoid, at least up until now, the empathy, the feel, which is what you were saying, right? Yeah. So what would a customer be without you being empathetic towards them, or understanding, to Dan's earlier point, being proactive with them and saying, hey, by the way, your anniversary is so-and-so, and I'm trying to reach out to you to do this. That human touch, you can't avoid, even now. By the way, watch 60 Minutes last Sunday, 60 Minutes. One of the people on that was somebody who won the physics Nobel Prize. Don't quote me on it, whether it's physics or not. He's a Nobel laureate. And he has a PhD in neuroscience and a PhD in artificial intelligence neuroscience, right? And he came back and said, I needed to understand the human neuroscience because I wanted to understand how then I could incorporate that into the AI world. And he was asked, so how long do you think it's going to take for AI models to now have empathy and all of that? And he said, well, it's going to take a while. So he was asked, how long is a while? He goes, well, 36 months. Be conscious. It's coming.
Yeah. even ChatGPT, I've had some stuff come out just playing around where I'm kind of shocked at even the emotional sentiment that comes out. These models are really improving. Okay, Ahmad, so I heard you got to double your assets in the ranch, right? And you have a massive budget. No, you don't have a massive budget to do it. So AI, we just in the room before we had a great demo, right, of like the 50 tools you can buy. Okay, wait a second, 50 times 30. Wow, that might blow our AI budget here pretty quick. How do you make the determination between, and how are you thinking about what your tech stack is, how it changes? What do you build internally, if anything? What do you buy? How do you think through what you're going to buy when these platforms change like every 2 months?
Yeah, I mean, that's a great question. I mean, simplification is super important in technology, right? Less systems you have, easier to maintain, etc. So for us, I mean, we prefer to obviously buy. We're not a tech company. We're still an insurance investment company. So anytime there's an opportunity to buy something, we're going to go buy it. I mean, a lot of the AI models today, you're building hybrid solutions, right? You're relying on somebody's LLM, et cetera. You're integrating through APIs and you're getting the outcomes you need. Where we really think about building, and only in a few use cases, is where we do truly get like a competitive business advantage. Like investment is a very niche area where we have our secret sauce. We want to protect it. So these are the scenarios where we're going to try to build it ourselves. Even like the LLM itself, we're going to kind of consider building our own. And there's obviously a lot of considerations that goes into it. Cost, scalability is important. We want to double our AUM, right? So we want something that's scalable. Speed to market. Talent is also key, right? Do we have the right resources? Do we have the right partners that can help us, that we can also learn from them? And we have a partner in the room here. So, and we've done it, right? We've had resources from our partners that helped our internal team kind of get where they needed to get. So those are some of the things we think about.
So if you're thinking like prioritizing what you should do first, is it strategy, partners, then tech? I mean, do you have sort of a roadmap you might share with people in terms of how to think about going through that decision process?
Yeah, so I think the strategy Doug summarized it, especially for me, focused on sales, right? So yeah. My roadmap to support sales is exactly what Doug described.
The business
right?
plan.
That's what we're working on.
Yeah.
And then from there, like looking at the right technology to support the different use cases that we have. And then from there, do we have the right partners and do we have the right internal talent to support it?
Okay, great. Since we are a highly regulated environment, how does your company think about avoiding bias, avoiding creating segments that may cause concerns from regulators?
Yeah, so I think it's so we've been focused on use cases where we have control over that as well. So a couple of things I can share. You want to make sure that you're using diverse data and non-biased data when you're training your models. So we're trying to avoid features like age, gender, etc. Right? And we do have a governance body at GA that ensures that we're following these guidelines. So we are in a heavily regulated industry, like Paul said. So for us, we are staying close to the regulators as well. So we're educating them, but also listening to their concerns, right? So that's, we were spending a lot of time doing that. And I think the other thing I would share is you need to leverage frameworks that give you some controls, right? Mm-hmm. So where you can kind of inspect and verify. And the last thing, like you mentioned, agentic. I think, agentic is great. So it's autonomous AI. You're relying on an agent to do tasks for you. I don't think we're there yet in most of our use cases. We're still relying on human AI interaction, where you still have a human verifying, and that's helping us get through some of the compliance concerns.
Okay, interesting. Well, I know we were near the end of the time. I'll have the sort of last question, and if we have any more time for questions, maybe we do it after the session is over. But I personally think that when we look at and say, how does this change our industry? I think 10% of the answer is going to be technology. The other 90% is going to be changing behavior. And maybe we just go along and maybe share, what are the best practices, your learnings as you put some of these solutions in place in your organizations? How do you get people to actually try this stuff and maybe change behavior? Doug, I'll start with you.
Like for behavior change, it's really all about the end user. So like one problem sometimes is that use cases get prioritized at the highest level. And that means that like the specific functional requirements, sometimes they're not gathered by the end user. And the cost of that is that when you go live, the end user says, oh, I would have prioritized this feature first, or could you have changed the output this way? It would have made this AI product better. So really engaging with the end users in the beginning for the functional requirements is a great idea. And then that AI and data is a team sport, so like really a collaborative development. So also bringing the end users in and putting a business hat on, reading their standard operating procedure, asking them how they do their job, so that you develop a product that they'll actually ultimately have buy-in.
Great. Dan.
Yeah, I think there's a few things here to help, like with the behavior change. I think one is education, right? Most folks like see AI or they see ChatGPT or something like that, and they're just not sure how to approach it. I kind of like the session that was before us, where it was big 3 use cases.
Right.
That was a really cool session. It was a good idea, actually.
Yeah.
And so, like, but what that does is it opens up people's creativity, and that helps them understand how to use something they don't know how to use. In your corporation as well, giving them a safe space to experiment and to play with things, and to give them, access to software that's sanctioned, so they can't, inadvertently share something they shouldn't share. So give them the right amount of like governance, in addition to some good training and education on the best way to maximize like the software in their jobs, are 2 big pieces of this. I think the third piece is like, you have to measure the outcome you're trying to get to with AI penetration in your org, right? Is it productivity improvements? Do you just want to see the number of prompts coming up? Do you want to see monthly active users coming up? Like, set a good quantitative benchmark so you can be honest with yourself around how well it's absorbing, and then keep refining and iterating on like that absorption.
Come on, our researchers.
Yeah, I'll come from an unbiased perspective, not my own perspective. And here's why I say unbiased, to the words that Hamad said. So at Conning, we do that industry-wide research where we, every year, this is the 3rd year that I've done that, up at the head of that, where we talk to the top 100 CEO, CIO, CTO of the insurance industry, right? So you think of the top 100 insurance companies, large, mid, small, all of them. There are probably several of them in this room, at least one. And your CIO, CTO, CEO participated in this survey. And from that perspective, I can tell you where some of this is coming from. I think it is a foregone conclusion that AI is here, right? That's what we are hearing across the board from all of these C-suite executives. 12 months ago, it wasn't the case. I'll give you one case in point. 12 months ago, we asked, how much of generative AI are you utilizing in your work process, in your entire value chain? And value chain includes underwriting, claims, customer service, risk control, all of that. So we asked how much of AI, Gen AI, are you using? Gen AI didn't even show up on the scale. There was LLMs, MLPA, all of that showed up on the scale, right? This year, 55% of the respondents said we are fully implemented in Gen AI, from about negligible to 55%, right? And then the one thing that I get asked, this is probably the 4th week in a row that I'm on some panel or the other at industry conferences, and each of these panels, Susan's laughing because Susan and I were in Washington last week. And I tell you, every conversation I have, every panel I have, every time I get off stage, people ask me, so Madhu, is AI going to take my job? Right? That's the big question. And here's what I say. AI is not going to take your job, but people who know how to use AI will take your job. So we all better get comfortable around being able to use AI, get comfortable around that. And I'll end with one other thought. We talked about bias, we talked about application, implementation, all of that. If you think about it, right, I also happen to, by the way, be the chair of the Diversity, Equity, and Inclusion, which no longer is a good word now. It's culture and belonging globally for Conning, right? And from that perch, I can say the one thing that I always say is inclusion, right? I've always been engaged in conversations where somebody came in and said, Manu, this DEI thing is absolutely useless, right? And they'll have this big argument with me, and I'll smile and I'll say that the fact that you're engaging in this long conversation with me proves that you want to be included. So start with inclusion. So I'll use that same example to say that if you think about AI as an inclusive tool in your repertoire, you are going to be better served, right? It's here to stay. You better figure out how this involves your entire value chain in your work process. I'll stop there.
Well, thanks, Ahmad. Bring us home for us.
Yeah, I think just going to repeat something Doug mentioned, right? So working with the people that are closer to the work, I think it's extremely important, right? And I've had an experience recently where we've developed something. I was excited. I demoed it to the people. We do a pilot and then immediately get it through my feedback loop. This is so robotic. I'm not going to be able to use it. So it was a 5-minute change, but like that was great feedback to correct something that, was now going to help our users. So again, feedback loops, working with champions, change management is huge because if people don't adopt it, it's just going to sit on the shelf.
Imad said the most important work with champions. Your C-suite has to be the champion in any kind of an AI or any kind of a cultural change, because this is a cultural change, right? Because if you think about it, all our lives, we've grown up saying you go to school, you go to college, you go to grad school, and then you come in and you have this reward of all of that effort where you are going to have a great job. Well, suddenly graduates now are saying, well, my job's gone. Some AI tool's doing my job, right? So it's a cultural shift in the world, and therefore we have the responsibility to kind of inculcate that so that it's a beneficial tool across the entire spectrum.
Well, I think that was a great commercial for Susan Winkler's talk at the end of
Exactly.
the session, right, Susan?
Thank you for that.
Yeah.
Thanks for the $10, Susan.
Yeah. So, all right. Well, listen, thank you very much. Thanks for coming. And, please reach out to everybody for more information here.
Nassau Financial Group is always working harder to be your carrier of choice. We build products that help protect people's savings and are dedicated to providing you with best-in-class service. We seek to keep things simple and have your back in the years to come. Nassau is headquartered in Hartford, Connecticut. Learn more at nfg.com.
Zinnia, an Eldridge Industries business, simplifies insurance. It delivers comprehensive solutions for the industry's most critical needs and creates the modern rails of the insurance industry. To learn more about Zinnia, please visit zinnia.com.